Hi there. Welcome to another edition of Talk Stocks. I'm your host, Keir Reynolds, and today we're lucky enough to have Drew Zimmerman, CEO for Stallion Uranium, trades on the TSX Venture Exchange under the symbol STUD. Hey, Drew, how you doing today?
Very good, Kier, and happy to be here with you and looking forward to a good conversation ahead of us.
Excellent. Well, I haven't I'm probably one of the only people I haven't touched on uranium much, so it's great to have you on. Maybe we could go through a bit of a conversation on it. It's kind of been one of the sort of bright spots in sort of junior mining in the last couple of years, and we just were attending some investor conferences there, it seemed to be quite a bit of a buzz sort of going on around it. But before we kind of jump into that, maybe we can kind of start with you. Would you mind just giving us a little bit about who you are, your background, how you got started in the business?
Yeah, absolutely. I mean, depending on how far back you want to go, I mean, I'm a Northern Alberta boy, born and raised out on the farm up there, but came out to the coast to Victoria for university at the University of Victoria. Did my international business degree there, and once you get used to the warmer winters, it's hard to go back to the prairies right away. So I just jumped across to Vancouver, where I got into the brokerage business, and I started in and focused on the commodity markets. Grew that business as I was there for almost a decade at a national brokerage firm here in Vancouver, and did my CFA, became a derivatives portfolio manager. So my role was focused on top down macro stories, and then utilizing futures and options to have that market view, and look to make money or hedge risk with the clients that I was working with. So it was a great decade. You learned a lot, and then being at a brokerage firm here in Canada and in Vancouver, of course, there is the small cap business that's a big part of the industry here. So also did some of that business as well, which gave me great insight to what has now led to where I am now. But that's sort of the quick overview of my come up into the business.
Excellent. Well, as we sort of say in the industry, sort of going from like the broker side to the issuer side, we call it going to the dark side. Some of us say. Uh, so how did some of that experience on the brokerage side prepare you for being in the driver's seat on a junior mining exploration company?
Yeah, no, that's that is how it's described, jumping over to the dark side. But the opportunity of working with clients that were investing in companies, what investors were looking for in companies, and evaluating them, constantly on the other side of the street, gives you a pretty good lens at what investors are looking for, what you really need to get right, execute on, having that vision that investors can relate with and get behind is very, very important. So through that sort of time, it was really being able to see that from the other side, to know what I wanted to be when I came to this side. And I think something that we learn in this industry as well is it's the people you're working with. Every company takes a village. So the opportunity that came up for me, to be able to come over to Stallion with such a good team behind me, was really what made the opportunity so exciting, and what we've been able to accomplish, I think, is a reflection of that team that's behind me here. So it's a lot of things that come together, but definitely a lot of experience of that decade really helps what we've been doing here at Stallion over the last few years.
And when did you move from the brokerage side to the issuer side? How long ago was that?
Was just over 3 years now, and it's crazy to say that because time does definitely fly by. I mean, we've been very, very busy. Stallion started with a great gold asset and added another, and then it was a year and a half ago we really started to look and do the due diligence to transition into the uranium space, which has been something I've been incredibly excited about, and very happy with the work that we've been doing. And I know we'll touch on that a little bit more as we go.
Yeah, excellent. Yeah, so junior mining's been sort of like, I guess a bit of a grind for some. We I guess well, it shouldn't necessarily perform very well when you have a rising interest rate environment. It's, purely sort of risk growth capital, and those things tend not to perform all that well, but uranium has done amazingly well. What are your sort of thoughts on, you just attended a few of these conferences like I did. I'm sure you're busy as could be. Any takeaways from that? What do you think about the junior mining sector as a whole?
Yeah, sorry, very good question. We were just at VRIC for 2 days. We had a booth there. The attendance was fantastic. Hats off to Jay Martin, who runs VRIC. He is a board member of ours as well. So, that makes the conference extra special for us. But the sentiment there, not only was the audience there, but the sentiment, the optimism, throughout the junior mining space was incredibly strong. But for us being in the uranium side, being able to tell our story, which is, we are a very large, prominent explorer in the Southwest Basin. That was a story that resonated. People are really willing to hear the uranium story, the nuclear power story, the clean energy that's baseload power for the future story that I think is becoming very, very important. And I think it's incredibly interesting to see the change even in the last 18 months. Month on month on month, more people are understanding the story. They're understanding some of the supply demand of the uranium market that's causing prices to do what they're doing now. But they're also willing to get behind it as understanding that this is going to be a change that we've sort of embarked on. And to use the word that everybody is using right now is a renaissance, because it really is that. We had sort of a nuclear winter, to add a pun in there, that the last decade was really moving away from nuclear, and it's been the last 24 and even 12 months, especially, that things have really started to go the other direction. And I think having that general public perception getting behind a sector is so important, and just a tailwind for the industry. And I think it's just starting. We can get into a bit of the macro on the uranium side if you want, and you can see that yes, prices have gone up dramatically, but the stage is set for higher prices and sustained higher prices for not only years, but probably decades or more to come.
Yeah, excellent. Well, it's been a little sort of interesting. A few years back, Germany, through some political stuff, decided to kind of, shut down some nuclear power plants, and because they were looking for, greener sources of energy. But then, it looks like they've gone and had to sort of supplement some of that with more, like energy production from like things like coal, which certainly is not clean energy. It definitely seems that we've had a bit of a shift here in policies from nations who are now starting to look at nuclear as the next sort of realistic sort of approach for baseload energy. Hard to have stable energy with just solar and wind and things like that. You need other forms that can produce energy 24 hours a day. So yeah, maybe we could you could pull out some of that some of the macro stuff you used to do on the portfolio management side. Maybe you could talk a bit more about what you're seeing on the uranium side.
Absolutely. And I mean, everybody likes to bring up Germany. They're sort of the, easy sort of uh, target right now because of, how backwards their policy has become. Obviously, they're increasing coal demand, increasing wood burning, uh, while they have reactors that they just shut down at the end of last year. And again, they go to an election in June of this year. And, elections are people saying, we don't like a tripling of our power bill. So, some of the leading parties there are pro nuclear. And that's going to be, a potential catalyst when that comes, because they've got 6 to 8 reactors that could get turned back on, which would be great for the country, great for energy security, but also have demand come back to a market that really doesn't have the supply. And I think, we've had a couple key catalysts, at the end of last year and this year. And as much as everybody picks on Germany, the US does have the world's most nuclear power plants operating. But just last year, they built their first one in 30 years. So it's not like they've been a big proponent this whole time they're starting to turn and come back to it. And I think the huge positive was at COP28 when, led by the US, 22 other nations said we're going to triple our nuclear capacity by 2050. And importantly, as well, as that language moved nuclear into clean energy sort of unanimously. It never was sort of unanimous with clean energy. Some countries sort of had it on a periphery or different wording. So now that it's fully understood to be clean energy, it really allows a lot of countries to put a lot more funding and initiatives behind it as we use nuclear as our push to net zero by 2050. And the other key catalyst, so I mean, that's demand. Demand continues to build. I mean, we see everybody sort of extending existing reactor life, looking to build new ones, SMR technologies that are getting better, and incentive programs for that. But the key thing is near-term supply. And beginning of this year, the one sort of big potential bear case was Kazatomprom, which produces about half the world's uranium, was always potentially able to turn on the taps, so to speak. And when they came out at the beginning of this year and said, we're not going to be able to hit the production guidance that we had laid out, we're not going to be able to increase production, that was the market, I think, coming to realize that unlimited supply that could just get turned on isn't there. And if that isn't there, then you're supply constrained right now. And even Cameco, had to guide down their production last year. So not only are these the two world's biggest producers of uranium not able to ramp up, they're not hitting their expected targets, which means they have to come in and buy those contracted pounds in the market that's already short on supply. And this is a uranium bull move that doesn't have a lot of secondary supply like a lot of the other big uranium bull moves have had over the last 20 years. So it's really setting the stage for commodity prices to do a lot better. But it's also important to realize that when you talk about any commodity, everybody always says the best fertilizer for high prices is high prices, because you'll go out and incentivize a lot of supply to come online. But with uranium and mining, that takes years and years, as we know. So right now, there isn't anything coming on that's going to be that immediate, supply sort of bridge that could really help us. But the other good thing is on the demand side, it isn't a pretty inelastic demand. You've got big utilities where uranium fuel cost directly is usually about 4% of the cost of their operations. So, if you have natural gas go from $3 to $10, everybody's electricity bill that's coming from natural gas is going to go 3x, 4x, 5x. But if you move the price of uranium from $100 where we are today to $200 even, the household bills that are powered by nuclear power, you're really not going to see a noticeable increase like you would with other commodities. So it's good to have that inelastic demand that can, again, sustain much higher prices and incentivize the companies out there like ourselves that are doing the work to try and find more supply for the market.
Excellent. Thanks for touching on some of that stuff. I think it's always important. It's a bit unique compared to some of the other commodities, just because of the, this nuclear energy and how much sort of, how uranium sort of plays in a nuclear fuel and how the fuel sort of works. So thanks for touching on some of that. Maybe you could give us like a bit of an overview on Stallion, like what's Stallion all about, where your project's based. You mentioned that you sort of started as a gold company and now, I guess 18 months ago, pivoted into uranium. You talked a bit about your team. Why don't you just give us a good overview, a good pitch on the company?
Yeah, absolutely. We came into uranium about 18 months ago and came in aggressively. We thought the uranium market was going to have a good run. Obviously, it's exceeded even the expectations that I had near term, and do think there's a lot more there. So we built out a very large land package early, which was fortunate because the Athabasca Basin is the highest grade uranium deposits anywhere in the world, and a good geopolitical environment to be working in. Very pro mining. Saskatchewan's always ranked very high by the Fraser Mining Institute year in, year out. And we see that as we do the work that we're doing there. But we built up over 3,000 square kilometers, and our focus is on the southwest Athabasca Basin. So that's where Next Gen Energy is, fission uranium is, F3 uranium with their recent high grade discovery. but also Orano and Cameco. So you still have, the big legacy producers in the area as well. But again, we have the largest exploration package in that area. And we think the western side of the Athabasca Basin is where the eastern side was in the late 70s into the early 80s, because the exploration just hasn't happened there. If our land package was on the east side of the basin, it had 500 drill holes in it, because it's very much more explored there. It's built out. They have more infrastructure. But we're doing that early stage exploration now, and we think that boom is coming to the west side. We're seeing more infrastructure coming to the area with NextGen and Vision looking to go into development, which will be over $1 billion coming into that area. So significant tailwinds for the Southwest. And importantly, as I said, when I jumped over to Stallion was the team behind you. So we've got 3 shareholders that are just under 30% of the company, just under 10% each, that have had an absolute tremendous amount of success, especially in the Athabasca Basin. The group founded and ran Hathor, found the Rough Rider deposit. Stephen Stanley, who was the first CEO of Hathor, is on our board of advisors. They sold Hathor to Rio Tinto for $650 million in 2012. They have some of the foundational assets they vended into NextGen early on, remained significant NextGen shareholders, and also vended in land to Athabasca Energy, which is a company that we've done a big joint venture with, but has significant land holdings in the basin as well. So, key shareholders that allow us to have that vision to say, go out and take an underexplored area and show that, we have the potential to find the next Cigar Lake, the next MacArthur River. And if we do that, that's where you can have significant valuation changes. And that's what, this group is looking for, which is great for me on the management side to be able to have that strong backing and say, here's the steps we're taking, methodically, one foot in front of the other. And we can get into that as we go forward. But, being able to have that mindset to create a lot of value over the next 2 or 3 years is what we're really focused on.
Excellent. So you got about 3,000 square kilometers, a lot of land. How many individual sort of projects do you have, and what would be sort of flagship ones that we should be paying attention to?
Yeah, we've divided it up to about 8 projects right now. That might change a little bit more because one project is our Atha joint venture, which is about 2,200 square kilometers. So a very significant single project that
Wow.
as we complete, we're currently flying a regional survey on that. So that's going to give us, key target areas that will be followed up on. And as those target area comes up, that might make sense to separate the project into some smaller project areas that we'd be going after. But the good thing for us and our investors is we've sort of got a 2-stage exploration strategy. As I said, that regional survey we'll be completing near term on that large joint venture project. But we had already flown a regional survey over 100% owned ground, so advance those sooner. So our Coffer project is one of our key projects that we're moving forward right now. We've got 3-year permits for it, for working on the ground and drilling. And we just actually this morning announced the completion of a targeted ground survey on our Appaloosa target. So again, our strategy has been, start really big with these helicopter airborne surveys, find, the specific target areas that you want to work in on, and then go back and do a focus survey that will give you the drill targets. So a much better resolution survey. And that's what we've just completed. And the preliminary results were excellent. They tell us, yes, keep moving this target forward because the potential is good. It's everything that we want to see. We've got, discrete conductors and the magnetic lows and the alteration areas that we think host uranium mineralization. And the good thing for this target is it's 13 kilometers straight east of the Shea Creek deposit, which is owned by Uranium Energy Company and Orano, that has 100 million pounds in the ground. So we know the area is very well endowed. So when you're seeing all the signs that we're seeing in that area, it makes us incredibly excited. And that's going to be the news flow that we're looking forward to, both the full results of that survey in the coming couple of weeks, but also as we get ready to announce our mobilization of drilling. And our intent is to be able to have those drills going by the end of February. So pretty near term. And again, when you're a junior exploration company, having that drill bit turn can be incredibly exciting, especially when you're going after uranium in the Athabasca Basin just because of the potential high grade deposits that are available here. I mean, our neighbor F3 Uranium, when they hit their discovery hole in the end of 2022, they went from a 20 million market cap to 150 million in 3 weeks. And that was 45-pound uranium versus the 105-pound uranium we have now. So we're very excited about the potential we have in front of us, and excited with, the bigger surveys that, again, will be coming in, giving us a lot more targets as we move forward. So a lot of value creation there. But of course, for investors in the market, very excited about the upcoming drill program that we have as well.
Have you publicly stated anything about like the size of the drill program, how many meters, how many holes, how long it would sort of take to do?
Yeah, we have put that out there. Our intent is to go out there and do roughly a 3,000 meter program split between 3 holes. So it is a little bit deeper part of the basin, but again, our thesis has been, be pragmatic with the data coming in. If that's your best target you want to go after, then that's what we're going to go after. And near term, it is the target that we've advanced the quickest. Some other key targets that we'll be advancing to drill readiness as well in the coming months. But this is the one that we really like to go after. So being able to get out there and do 3 drill holes, again, we've got 3,000 square kilometers that have not seen a drill hole. So it's going to be very exciting to one, learn a lot about the geology of our specific project areas, but to be able to have, that first, more advanced stage exploration take place. It's going to be a lot of fun. We're really looking forward to it here.
Right. And what sort of mineralization, like what sort of intervals of mineralization, should investors sort of like look for? I guess Athabasca traditionally is sort of like high grade, sort of more narrow, like much higher grade than other places in the world for uranium production and uranium exploration. But what sort of maiden hit would be interesting for you guys?
Yeah, I mean, that's something where, we always have to temper expectations. This is a junior exploration project after all. So, we're going through the overburden and then several, hundreds of meters of sandstone before hitting the unconformity and the basement rock. So the good thing with our projects, and another thing that tilts the odds ever more in our favor a little bit, is being in the basin, going through that sandstone. There's 3 uranium types that we can potentially discover. So you have the perched uranium, which would be, up in the sandstone above the basement rocks, the unconformity hosted, which would be like a cigar lake, sort of right at the meeting of the sandstone and the basement rocks, and then basement hosted mineralization as well, like Arrow, the next gen project. So, we have the potential, and we will be testing for all 3. So for us, out of the maiden program, being able to hit, an intercept of what would be anomalous uranium mineralization would be key. Obviously we'd love to have a high grade intercept, which would be great. But even then, seeing alteration, the sort of mineralization and geology that uranium is hosted in would be key for us as well. And being able to do some downhole probing to, learn more about the area down there, again, will be just very insightful and very valuable data for the company with those 3 holes. So excited
Great.
for it, and obviously the potential is for the uranium mineralization, but we're really excited to just learn a lot from everything we get from the holes.
Gotcha. So it sounds like, obviously with it being maiden drill program, it's more be able to get down there so you could learn a bit more about how the uranium might, the mineralization might be. So in future drill programs, you'd be able to sort of understand what you might be looking for and how you should be drilling and how you should be targeting. That sort of summarize what you're doing now?
Yeah, absolutely. Like I say, I mean, the intent is obviously still to hit mineralization from the modeling we've done with our geophysics, but exactly, being able to learn a ton with a maiden drill program, that is invaluable knowledge that you take forward with the rest of the work that you continue to do as you go for mineralization, if it's not found in the maiden program.
Excellent. So what does the share structure for Stallion kind of look like? How many shares are outstanding? How many shares would be owned by insiders on a percentage basis? You did mention you've got a few strategics that sort of three that own almost 10% of the company. So combined, I guess, of just under 30, which you mentioned. That's great. Could you give us a little bit more color on your cap table?
Yeah, absolutely. So we've got 110 million shares out right now. As you mentioned, those three shareholders, very, very key and very supportive backers of ours, which is always, incredibly exciting. With our Atha joint venture, Atha Energy as a company owns about 2.5% of us, and our insiders and management are just about 2% as well of the company on top of that. So, we're working to bring more institutional names into the story as we, take what was a pretty greenfield land package, but progress it and show that because we know this area has, an incredible endowment of uranium all around us, some of the world's best deposits, being able to advance it to the exploration stage we're at now, starting to get some more institutional uptake to help with that, the cap table. But yeah, very fortunate to have, a good sort of 35% of the company with some key, public shareholders and then some other, good shareholders as well that continue to support. And, with the uranium market being as hot as it is or bright as it is right now, definitely getting more interest from generalist investors saying, we want to allocate to this sector, and the sector right now is still incredibly small when you compare it to other mining sectors or other commodities. So it doesn't take a huge amount of capital to come into small companies like us. Obviously, the developers and the producers like NextGen and Cameco and Denison, trading at or near all-time highs to start this year. So some significant moves there, and love to see that right now, beginning of this year, we're starting to see volumes across the board in the junior space as well. So I think people realizing that this uranium market has legs for the coming couple of years. And, yes, the developers and producers can be a good play, but, if some, volume starts coming into the juniors, like we're starting to see now, they can move really quickly and become, pretty exciting investments for investors to look at.
Right. Well, highest risk, highest reward are pure explorcos. So you guys make a discovery could be pretty spectacular. That's obviously what some of the reason why we allocate capital to the sector is there's nothing like a maiden discovery. So we wish you lots of luck with that. Anything else you sort of want to cover on? Anything else that sort of stands out or would be interesting for investors, potential shareholders to sort of know about Stallion? Any of the other people on your board or management team you might want to touch on? Is there anything that we've sort of glossed over or not talked about yet?
Yeah, absolutely. Just to start with people, again, always important. Obviously, we added a VPX who has Darren Slagowski, who's got 10 years experience in the Athabasca and focused with Pierpoint on the Spitfire deposit, one of the key deposits in the Southwest. So, really understands the Southwest Basin, and that's what Stallion is focused on. And to help him, just at the beginning of this year, we added Matt Schwab, who I think was employee number 3 at NextGen Energy, their senior geologist when they found the Arrow deposit. So to have his knowledge of being able to find these significant deposits in the Athabasca Basin, to have him work with our VPX was a tremendous add. And again, focused in the Southwest, really understanding that geology and what it takes to find a discovery there. So those are key people mentioned off the top. Jay Martin at BRIC has been a great support
Great.
for us as well, all the way through. But the other key thing for investors is Stallion did start as a gold company. We have 2 great gold assets next to world-class deposits in Idaho and Nevada. And as we've sort of said, when we renamed ourselves to Stallion Uranium, we are looking at the ways to best advance those projects because we think there's tremendous opportunity there. Both neighbors are having a lot of catalysts coming up near term. So we are having some conversations to figure out a way to advance those that will still see significant valuation come to our shareholders. And I think that could be some pretty exciting news. I mean, we are very focused on the Athabasca Basin. That's
Sure.
where our time, energy, and capital is going. But I think if we're able to show the valuation that I think we're going to be able to on the gold assets, that creates our valuation on the uranium side as being, that much more attractive given the amount of work that we've done, the land package that we have, and the people that we have behind us. So, that will be something we're working on in the coming months, and hopefully be able to come to market with a transaction on that front. But definitely focused on the uranium and see a tremendous amount of potential there with the work that we have coming up in a couple of months.
Excellent. Now, I think you have a financing, so you've been pretty busy here. Thanks for still fitting us in, but I think you've got an active financing going on. Could you speak to that, like how much you're raising, terms of it?
Yes, so we announced a financing after market yesterday. Building the book on that right now, going well. Like I say, good interest in the uranium sector, which we're incredibly fortunate for. We launched a $4 million deal. Part of that is a charity flow through structure. So again, using some of the structures available here in Canada that allow us to raise capital at a less dilutive rate. So that hard dollar component that we're doing is a 22-cent unit, meaning you get a half warrant for 2 years at 36 cents. But again, that charity structure allowing us to raise money at 36 cents and 32 cents. So again, overall, we're sort of pricing in the $4 million raise at an average cost of about 30 cents, which for us, we were trading at, call it 26 cents before the financing, a little lower here today as the financing comes out. That's expected, but getting the understanding that is, sort of 30-cent capital cost paper coming into us, I think, should encourage investors, especially with the news flow that we have coming out on the other side with this financing, funding that maiden drill program and bring up several other key targets that we'll have into that drill ready status is going to be pretty exciting.
Yeah, you're trading, I guess, 22 and a half, 23 cents here today. So good job on getting sort of average cost to be in the approximately 30-cent range. They typically call these things underwriting, so people wanting discounts. So anyways, good job there. What's a typical day look like for you? Some of my audience, they I find it pretty interesting. It's a very varied sort of job for a lot of people on the issuer side running these things. What does a typical day look like for Drew?
Yeah, I mean that's a very interesting question because it does change a lot, and I guess the sort of forward on that would be, we run a pretty lean team with small companies, so the CEO hat is a hat of all kinds. Do a lot of the different jobs here at the company, obviously. Helping our geologists set up the operations for all the work programs we're doing, making sure that those are getting executed correctly. And then, right now, as we just mentioned, we were both at conferences. So, that's a big part as well, making sure investors are, staying aware of your story, staying in touch with existing investors, putting out constant news flow for the market to know what you're up to, being out at these conferences, all the, materials it takes to get ready for them, the one-on-one meetings with different investors at the conferences, at the booth, talking to people and sharing the story, being able to get on, podcasts and interviews like this is a big part of it as well. That preparation for it. So there's a lot of different hats that go into it, and again, being on public markets, we are a well-regulated industry, so we have the auditors and all the sort of paperwork you call it on the back end of
Violence, yeah.
keeping a public company going with all the filings and so forth like that. So the days are long, but because you're doing a lot of different things, it's incredibly exciting, and when you feel the momentum moving like we do in the uranium sector and the projects that we have going, it's energizing. And getting out to the conferences like we were just at, talking with investors about the opportunity, about when they got into your story, what they see, what they like. I find that to be incredibly energizing, and the thing with a small company, as with any small company, public or private, is you're there to really build something. And when you really get a sense that you're doing that and doing that in a pretty significant way, it's a very rewarding experience. And I think you have to find that really rewarding, because it does take, a lot of time, energy, and effort. And if you're not getting that energy or that rewarding feeling, you're not going to have that energy that you need. So it's a great job. Jumping over 3 years ago, as I said, I wouldn't change it. I wouldn't look back and do anything differently. Learn a lot as you go through it, but I've also got to meet a lot of incredible people in the industry on this side, and it's been great.
Hey, excellent. Do you have any other sort of like marketing or trips sort of upcoming? Any other conferences that you're sort of attending? I know we've got that Toronto one, PDAC, sort of coming up. So anything you can touch on there?
Yeah, I mean, still visiting Roundup here. That's where a lot of the geological work gets done. A lot of the contractors are there, so we'll be over there a little bit later today. At a smaller conference here in Vancouver, the World Outlook Conference, coming up beginning of February. And then, out to PDAC in March for the big one in Canada or North America, really. So a lot of the companies in mining and investors in mining get together. So it's always a good place to get sort of everybody under one roof, or several roofs that are in close vicinity. But that's sort of the near term conference look. So it'll be good. It's always an exciting way to start the year, with a few big conferences bringing a lot of people together.
Excellent. And so when are you hoping that you'd start your drill program?
Yeah, we're looking to get everything going pretty near term, and we'll announce the mobilization of getting things going out there. And the big push is to hit this still winter season and have drills turning by the end of February. So coming up pretty quickly, which is very exciting. It always keeps us busy when we put tight timelines on ourselves, but definitely worth it. And with a market that's sort of dictating that we try and explore as quickly as we can, well, making sure that we follow the steps that you need to have the success that we want to have is there. So it'll be pretty near term, which would be some exciting news to be able to share with the market as we go through that process.
Any final thoughts you want to share before we wrap up?
I think we did pretty good at covering the waterfront there, but appreciate the listeners for tuning in. If you made it this far, follow us on Twitter, Stallion Uranium. We like to keep things out there, share some videos. You can see what we're doing, that kind of thing. And then our website as well for more information on all our projects and our news. You can sign up to get our news to your email, so you don't have to worry about finding it when we're putting out some of this specific news, especially if it's going to be market moving. So you can sign up on our website as well.
Well, you got a great symbol, stud. So let's hope you're a stud. But hey, Drew, really appreciate you spending some time with us, giving us an overview. We haven't really touched on the uranium sector too much, so looks like an interesting opportunity with such a large land package, and that you're being active on it, and some of the great people that have already been involved with massive discovery and development in the Athabasca Basin that are sort of around your team and directly part of your team. So we wish you lots of success with that. I'm sure your phone's ringing off the hook, so really appreciate your time. We'll let you go. Thanks, Drew.
Thank you, Kiera. Appreciate you having me on. It's been a lot of fun.